Hello, this is Jordan, and this video update is being recorded on the early evening of Monday, March 8th, 2020. And in this video, I'm going to talk about the current correction in gold and what history can tell us about when and how it might end. If you're watching this on YouTube, please subscribe to my channel. Okay, so the current correction is part of a larger cup and handle pattern for gold. And the current correction is the handle part of the pattern. Now, historically, there have been three other cup and handle patterns, although those three patterns have not fit the nature of the pattern close to perfectly, I would say. Although the current one does a better job of fitting the actual pattern. But let me review those other patterns. So from 1975 to 78, gold was so strong that it didn't even build a handle. It was just a cup and it just zoomed higher. And the only correction it had was it snapped back and retested the breakout. It's a quick 20% decline, but no handle on that pattern. Now the other two, you can see there's one from 1996 to 2004, 2005. And there's also one from 1999 to 2001. And what's interesting is the 96 to 04, 05 one, cup and handle patterns, they're bullish continuation patterns where there's an uptrend and then you build the cup and then you have the handle. There wasn't an uptrend in the case of the 96 to 04, 05 one. So that's one interesting point. Now the 99 to 2001 cup and handle pattern, the cup itself, that corrected a huge amount of the previous advance. So normally that doesn't happen. So anyway, those two, they're not quite perfect cup and handle patterns, but they're close enough. And so what I'm getting at historically and how it can be applied to today is those last two patterns. If I look at how long the patterns were, how long it took for the handle to form, how long it took for the impulsive move to begin, and apply those statistics to the current one, what that tells us is that potentially if this cup and handle follows the same timeline of those previous two, that the impulsive advance towards a breakout in gold would start to begin late November of this year up to February of 2022. And then the data for both is pointing to new highs or gold getting back to the high in July and August of 2022. So that's the projection and the takeaway from these cup and handle patterns as applied to today. Now, this is a correction analog chart, and we're plotting this data on the current scale, the scale of the current correction. And so in red, that's the 2016 to 2018 correction. In light blue, that's an average of 6 historical corrections, and those include 1975 to 1976, and also 1999 to 2001. So there's some steep corrections included within that. And then the darker blue, that's the average of corrections in 04 to 05, 2008, and then 2016 to 2018 again. And so I think the best, now no comparison is perfect. I think the best are probably 2004 and 2016. Now, I included 2008 because technically there's only been 2 other times where gold, it suddenly made a new high and then it corrected. So that happened late 1978, I think, and the other time was 2008 when it surpassed 850 or 880, and then it made a high March 2008, $1,000 an ounce. So those two compare with today. Now, gold or I should say last year, when gold surpassed the high at 1900, 1920 and peaked, and so now it's correcting. So that's why 2008 fits in there. So those are the three that are the best comparisons. But again, no single one is perfect. I mean, there's similarities to 2016 and also 2004. I think those are a little bit better based on the macro. And if we're looking at the stocks and the declines in the stocks, like they're right now they're not as steep as 04 and 2016, but they're somewhat close. But anyway, the question here, and I mentioned it, the impulsive move. That's really the question. When is the next impulsive move going to start for gold? And that doesn't necessarily mean the absolute bottom. The impulsive advance is when the market rises and then it just continues to rise and move higher and higher, with minimal interruption along the way. And so if you look at these lines, a lot of those you could say, what you could point to is the end of 2021, maybe early 2022. What's interesting is the 2016 to 2018, and that line there. All three are fairly similar. They have a similar path and trajectory. And until you could say, May of 2022. So, if gold, I think 2016 to 2018, if that's the worst case scenario, that tells you that the next impulsive advance would begin sometime August, September 2022. But fundamentally, there's a big difference. The Fed was hiking rates in 2017, 2018, and the economy was in late cycle. Now the economy's in early cycle. The Fed isn't going to hike rates anytime soon, and there's fiscal stimulus coming, and so there's the prospect of maybe more after this round. So the policy this time around is a lot more favorable to gold than it was 2017 to 2018. So we'll see where gold bottoms and rebounds, and we'll see how that aligns with history. And so perhaps later this spring or in the summer or fall, we might have a better idea about how the path forward looks. But this is an analog that I'm using right now. Hope you liked it, and hope you got some value out of this video. That's all for today. Go to TheDailyGold.com. Have a lot of free stuff there. Subscribe to my YouTube channel, and also you can check out my premium service. Thank you again for listening to this video. I hope it was informational, educational, and I look forward to publishing another one for you guys in the days and weeks ahead.